What's up everyone, it's Karthik with MoneyVest. So in today's video, we're going to have a little bit of fun. So I want everyone to participate and engage in this activity with me where I rank 30 companies in this video based on 6 different categories. Do me a favor, comment down below if you have any disagreements whatsoever with my analysis of these 30 companies that we're going to be ranking today based on these 6 different categories, which I'll explain, and also share this video with other friends and family, traders, investors who may also want to have some fun here as we kind of head into the next week, as there is, of course, obviously a lot of volatility, a lot of activity that's already happened over the weekend. I've already done several videos going over a lot of data. My brain is toast, so I wanted to take a bit of a break and really forget about fundamentals and technicals and just really rank these top companies in this video. So hope you all enjoy it, and again, find it helpful. Make sure that you drop a like if you find it fun, and subscribe to the channel. Also share this video with other people that might also find interest in this content. So we've got 6 categories. The rocket ships is going to be the first one. Rocket ships are categories for stocks that are just absolutely rockets, right? So they're ripping to all-time highs. They have done incredibly well in the past. Of course, most companies right now are selling off quite aggressively at the moment. But that being said, rocket ships are going to be categorized for stocks that are just ripping or have been ripping in the past. Snooze fest are stocks that are consistent, stable, defensive, but boring. Okay, those are snooze fest. Roller coasters are incredibly volatile stocks. I mean, they're all over the place. They are going up and down and sideways and just absolutely crazy amounts of volatility, creating a roller coaster type environment. A dark horse is a very underrated yet a significant potential stock, right? So it's kind of flying under the radar and has a ton of potential. A dead horse, on the other hand, is dead money. It's not really doing anything. It's just going sideways. It's really just been a waste of capital. And train wrecks are your complete losers, stocks that are just falling knives, selling off quite aggressively. So on the roster, we've got 30 companies. We've got Meta, Tesla, Apple, Microsoft, Google, Amazon, Nvidia. So your magnificent 7 companies. We've got Nvidia, PayPal, Visa, CrowdStrike, Broadcom. We've got Nike, Walgreens. We've got MoneyVest, which I'm obviously going to put under rocket ships. We are just flying over here. Just do me a favor and subscribe to the channel, and also share this with other folks so we can have more people join our rocket ships. I'm gonna put that in the rocket ships category automatically. Then we've got AMD, we've got Enphase, we got SoFi, we got Chipotle, got Super Microcomputers, Adobe, GameStop, Novo Nordisk, Starbucks, Coinbase, AMC, Lululemon, ASML, Intel, Palantir. So this is the roster for today. If you want a different set of stocks, let me know in the comments, and let's get going here. So starting with Meta. And Meta, as you already know, was a train wreck for a very long time. I mean, it was selling off during the 2022 bear market, down to almost $80 a share. And since then, it's been an incredible rocket ship, I feel, because it has recovered over 300, 400% rally, trading back up to all-time highs. And it's one of those companies that, even after this correction that we have witnessed in the NASDAQ, yes, it is in a bit of a correction. It is down double digits from all-time highs, but it's still held up really, really well compared to some of the other companies out there. So I'm going to put that under rocket ship. I think it deserves to be under rocket ship. It's done really well. Like I said, in the last 2 to 3 years, it has recovered really well, over 300, 400%. Tesla is going to be the next one. And I know there's going to be a lot of disagreements in this entire video. There's going to be a lot of comments, people putting different categories for different stocks. So let me know in the comment section down below if you disagree with me, if you'd put any particular stock differently. But talking about Tesla, I feel like it is very much of a roller coaster. If you are a Tesla shareholder, investor, you already know how much of a roller coaster Tesla can be on your mind, on your mental, as well as your capital, because it is very, very volatile. It's probably one of the most volatile stocks we have witnessed in the markets, because there's a lot of debate for Tesla's valuation. What's the price target? What's the fair value? What's the business? I mean, that's the very core question that we have around Tesla, which people still haven't figured out or agreed on, is what Tesla really is. Is it a tech company? Is it a automotive company? Is it an AI company? So because of that, I feel like it's a big roller coaster right now. Apple, Apple, very, very significant turn of events. For Apple recently. I mean, Warren Buffett exiting, almost half his position on Apple stock. That doesn't change the fact that Apple's been a very consistent and a very solid company overall. But I'm going to put this in snooze fest. Reason being is because it's not really quite a rocket ship. I mean, yes, the returns are good. They're consistent. They're stable, but they're not anything for a rocket ship type returns, right? Rocket ships are preserved for companies that are just blowing up triple-digit returns. But for Apple, it's been a little bit more stable, more consistent with the share buybacks. Apple on a surface level is not really a high growth company. It's more like a stable and slow growth company. So I'm going to put that under snooze fest. Consistent, stable, but a bit boring. Microsoft here on, of course, again, another very strong company, Magnificent Seven. And also done really well along with Apple and, of course, Meta and Google. All of them, Magnificent Seven, of course, have seen a significant amount of inflows over the years. Microsoft really got going after 2011. Up until 2011, a lot of people don't know that Microsoft was actually trading sideways. It was going sideways. It didn't really perform anything for many, many years until after it finally started to get going here. In the last 13 years is really what Microsoft's made a name for itself, and it's become one of the top companies in the world. So it's done really well in that time period, but I'm still going to put that under snooze fest. And again, there might be some disagreements, but I feel like Microsoft also is not a triple digit return stock. It is more of a very consistent with Apple. So I would put slightly above Apple, but I would put that in the same category as Apple because, again, consistent, stable, a little bit more on the defensive side, and then not super exciting. Yes, it's okay, but not super exciting, right? If you're looking for those exciting returns, Microsoft, Apple are good, not great. Coming over to Google, and Google has also, I feel like, it's been a little bit of a company that's very consistent with Apple and Microsoft, right? So I would also put that in a snooze fest. Not a lot of explanation needed. Now, when it comes to Amazon, right? Amazon has been incredibly volatile over the years. I mean, Amazon hasn't really seen that level of consistency as Microsoft or Apple or Google. Amazon, in fact, more recently just hit a new all-time high after a couple of years of staying below its all-time highs. However, I feel that Amazon's profitability continues to go underappreciated. I mean, it is going to become a profitable beast, in my opinion, over the long term, with its logistics networks now in place, with the company working so heavily on advertising and AWS. I feel like with under Andy Jassy's leadership, the focus now is shifting more towards profitability. So I do feel that Amazon is one of those companies that among the Magnificent Seven is more underappreciated than any other stock. So I'm going to actually put that under dark horse. I feel that Amazon is a dark horse in the Magnificent Seven, going a little bit under the radar, that there is a ton of potential long-term for this company that continues to go underappreciated. Yes, it sold off on a small miss on revenue, more recently when it announced its earnings, and also at the same time, the advertising revenue was a small miss, but I do strongly believe that Amazon, focusing now on profitability, is going to become a bit of a dark horse here in the Magnificent Seven. Now, when it comes to NVIDIA, oh man, where do I put it? Train wreck? I feel like it's been selling off quite aggressively, down almost 30%. A lot of investors exiting, even insiders exiting. No, but NVIDIA, of course, is the one of the leaders in the markets. It's seen over 1,000% increase in a very short period of time. So I think without any questions, it's going to come under rocket ships along with our MoneyVest and Meta, because it's seen incredible returns. Even after these sell-off, I feel like NVIDIA long-term, very solid player, because the growth, revenue, earnings growth is expected to be very, very strong. Okay, where do we start with PayPal here, folks? I need more help. I need more help. With PayPal, I am not sure. I feel like it's going to be a dead horse. It hasn't really done anything at all for many years. It's pretty much trading at the same level as back in 2017. If I were doing this video, let's say, 1 year ago when PayPal was selling off, I would easily, without a doubt, put it under a train wreck. But right now, PayPal, as you can see, that it's the same level from back in 2022. So for 2 years, it's been trading sideways. So for me, it's been a dead horse. It's been a waste of capital for me. Like, I've been investing in PayPal for over 3 years, and I am pretty much down almost 50%. So it's a joke on me, because PayPal for me, has been a dead horse. It hasn't really done anything. Now, when it comes to Visa, and Visa here, also a very strong company. It's a very profitable, extremely profitable. I mean, over a 50% net margin for Visa. So very profitable company. It's done incredibly well over the years. It did sell off a little bit over 10, I think 11% after the earnings were announced. From its all-time highs, Visa is still down. I've got my charts open on the other screen. Still down over 8.2%. Trading a little bit within the lower high and lower low pattern. But it has given us pretty consistent returns over the years. Not a super high grower. Not like Visa's earnings and revenues are growing at, high double digits or triple digits even. And the returns have also been very consistent, very stable. So I'm going to put that under snooze fest along with the other Magnificent Seven companies where it is stable, a little bit more on the defensive side, but very consistent and very strong. When it comes to CrowdStrike, oh god, complete train wreck right now, without a doubt. I think everybody can agree. CrowdStrike with the IT outage, kind of literally just blowing up the world with their disaster on code, taking down all Microsoft hardware. Without a doubt, I think it deserves to be in train wrecks, at least at the moment, because train wrecks are stocks you want to stay away from, falling knives, at least in the short term to medium term. Things can, of course, change. It can go from a train wreck to back to a dark horse, can be undervalued, underrated. But right now, of course, a bit of a dark horse here as it continues, a train wreck as it continues to sell off. Okay, let's switch things up a little bit. Instead of going in order, let's go over to some other companies. SoFi, what do you guys think? What are we thinking about SoFi? SoFi, I feel, has a ton of long-term potential. I mean, it's just recently becoming profitable on a GAAP basis. Anthony Noto continues to be very optimistic about their business long-term. Interest rates coming down is going to be a huge tailwind for the company, and it still trades in the 6s and 7s, right? So it continues to trade down significantly from its all-time highs. Well over, I think, $14 was the all-time high for SoFi back when it was in 2021. But if we come back over to SoFi's chart, so there we go. Actually, $28 was the all-time high for SoFi. From those levels, it continues to be down over 76% from its all-time highs. So I think I can confidently put SoFi as a dark horse, a stock that has a ton of potential but still continues to go underappreciated, flying under the radar a little bit. So that is something to keep in mind for SoFi. Again, make sure that you comment down below, engage, and let me know if you agree, disagree with SoFi's ranking. When it comes to, let's see, Enphase, and Enphase here has also been a big part of our channel. I've analyzed Enphase many times before. One of the top solar renewable energy stocks here, long-term, as I've said before. Yes, it's been volatile. Yes, at one point it was trading at a very, very expensive valuation. And of course, as interest rates continue to go up, and the actual profitability and revenues for the companies continue to come down, Enphase has struggled quite extensively. From 2021 up until now, it's been a complete train wreck. It's been selling off aggressively, but more recently, it's been going sideways. So it's kind of hard to select between a dead horse and a dark horse for Enphase. And the reason I say that is because it hasn't really done much in a long time. So if you take a look at Enphase's chart, which again I've got over here on my other screen, Enphase is practically at the same price as it was back in 2020. So 4 years of absolutely no returns. And then if you consider how much it's been selling off from its May 2023, June 2023 levels, it is at the same level. So it basically from 2020 it went up to all-time highs and then came right back down. So we are at the same price from 4 years ago. And then from this selling pressure that we witnessed, we are at the same level from about a year ago. So you could make a case for why Enphase is a dead horse. It hasn't really given us any returns, no performance whatsoever. But you could also make a case for it being a dark horse because the time is getting started for Enphase to rip and to actually perform better. I feel like the bottom is in. Nobody really knows where the bottom is, but I do believe that the quarterly numbers, the worst is behind us for Enphase, and interest rates coming down. It's going to be a huge tailwind for this company as well. So it's kind of a hard decision. If you're looking at the present performance, it is a dead horse along with PayPal. But looking at the future, it could potentially be a dark horse. So I'm actually going to put this in dead horse category for now. If it starts going, then we can upgrade it to a little bit more than a dead horse. But right now, it's been, unfortunately, a bit of a dead horse. Coming over to Broadcom. Now, Broadcom is another semiconductor chip stock that has done incredibly well. It's just been ripping to new all-time highs, well over $180. It's done a stock split recently as well. So without a doubt, I feel it is actually very, very, very close to becoming a $1 trillion company as well, because market cap right now sitting at just over $660 billion. So without a doubt, I'm going to put that under rocket ships for Broadcom. Now, Walgreens is an easy train wreck, I feel. It was also one of not so great picks from me. Walgreens, I mostly invested in this company because of the dividends, but with store closures and so many problems with different management styles and different capital expenditures, Walgreens has been definitely one of the worst performing stocks. It's just been a complete falling knife, coming down to low double digits now, pretty much entering almost a single digit in stock price. Unfortunately, it's been a bit of a train wreck at the moment. When it comes to Nike's also been selling off quite aggressively here. So, if I essentially show you how much it's down from its all-time highs of 173, Nike has been cut in half by over 57%. It is down, trading to as low as $74, $75. So it's been a quite aggressive sell-off from its highs of back in 2021. So I would also put down Nike as a bit of a train wreck as it continues to sell off. Actually, train wreck or a dead horse, because it's not a complete fall. It's not a falling knife to a point where it's uninvestable. But there is opportunity, I feel like, for Nike as well. So again, do help me out here in the comments. Where would you put Nike as a train wreck, as a complete dud and a falling knife to avoid, or if it's a dead horse that, yes, it's underperformed significantly, but there is a lot of potential for this, or you would upgrade this to a dark horse. It's kind of hard to say. It's been volatile as well. I mean, so it could be a bit of a roller coaster, as we could experience, because if I bring over the chart for all of you, so let me just see if I can show you Nike's chart and how it's actually performed. There's been a lot of volatility for Nike. So this right here is the chart for Nike. As you can see, that it pretty much sold off down 28%. Then it ripped a little bit over 57%. And then it sold off a little bit over 33%. Then it pushed up a little bit over 37%. So it's been incredibly volatile. And of course, recently gapping down after the earnings. So you know what? We're actually going to keep Nike as a bit of a roller coaster here. Yes, it sold off considerably from 2021, but it's been rather volatile more recently. Advanced Micro Devices, that's also an interesting one, because AMD has also been all over the place more recently. So you can see that it's down significantly from its all-time highs, as most companies are. So it's down a little bit over 42%. But again, it's been volatile as it's pushed up over 33%, and then of course sold right back down over 30%. And from its lows of back in 2022, when we were talking about Advanced Micro Devices in the 60s and 50s, of course, it's still up over 140%, at one point over 300%. So I would put AMD also under roller coasters. It's been just an incredible volatile ride for Advanced Micro Devices. Intel, I think it's an easy answer. It's a complete train wreck right now, so it's going to participate with CrowdStrike and Walgreens over there. Intel, with the recent earnings, it's just been aggressively selling off. I mean, down over 30% on Friday, is one of the biggest, 26%, one of the biggest red days we've experienced for Intel in over 50 years. So yeah, complete train wreck at the moment. Now let's take a look at Palantir, shall we? Let's take a look at Palantir. Now, Palantir is very close to its all-time highs. I mean, it's just over $26, $27. So if you come over to Palantir, trading at just under $25, in fact, it's been selling off. But recent trend, very nice uptrend, very close to, of course, all-time high sits well over $43. So it's been doing really well. I don't think that it is underappreciated. So I don't think this is a bit of a dark horse. But I will put it under rocket ships. And the reason being is because since 2022, since the company actually became profitable, Palantir surged over 340%. So that is an incredible amount of return in a very short period of time. In fact, Palantir may have just outperformed most companies and even the S&P 500, of course, and NASDAQ during that time frame. So easy rocket ship is what Palantir is. When it comes to Lululemon, now Lululemon, in my opinion, is a dark horse. I think it is selling off quite aggressively. It's got the highest M score. It is cheap. It is highly profitable. It is one of the strongest brands out there. It is a company that is selling off on very significant sort of catalysts here with some stocking issues and the new product launch not going as planned. So Lululemon definitely struggling, but it does trade at very attractive valuations here, and it's down quite considerably. So I do consider it to be a bit of a dark horse here, going underappreciated. Markets selling off over 54%. You could put it as a train wreck, but train wreck, we're trying to put the companies in train wrecks are companies that you want to avoid, right? Avoid as in like you want to right now in the short to medium term stay away from them because of how significant the selling pressure is, and there's uncertainty around the company. But with Lululemon, I feel like yes, there's uncertainty around the stock, but the company continues to be in a very good position. I mean, everything is growing and moving in the right direction, and that's why I feel it's getting underappreciated in the markets right now. When it comes to Chipotle, so Chipotle has also been recently selling off, so as most companies are, but overall, I feel like it's done incredibly well in terms of its returns. It is one of the top positions for Bill Ackman from Pershing Square. You'll notice that, since the pre-pandemic levels, it's up over 187% at one point, up over 270%. It has been selling off for a little bit more recently from $69 down to as low as $52. So down a little bit over $52 here. So recent stock split because it was trading at a very, very expensive valuation, but overall it's been on a nice little uptrend since 2022. The stock is up 119%. So Chipotle, in my opinion, would go down in a rocket ship. Incredible returns over the last year and a half, and of course overall very strong, consistent gains. Super Microcomputer. Now, this is a stock that we started analyzing back in, I believe, 2022 as well. It was trading at very, very low valuation. There was a dislocation in Super Micro's valuation. That's exactly why I started covering it. So, of course, since then it's rallied like insane, like there's no tomorrow. Super Micro is one of those stocks that's gone up over 1,000%. I believe when we started covering it was back around when it was at $40, $50, and it rallied over 1,000% to well over 4 digits here. Right, so over $1,200 a share, and more recently it's been coming off quite aggressively, right? So down over 49, almost 50%. So Supermicro, without a doubt, rocket ship, just absolutely ripping to new all-time highs when it was at $1,200, over 1,000% gain. Okay, let's take a look at GameStop and AMC. I feel like I'm going to trigger some Wall Street bets people here, but where do we put them, folks? Where do we put GameStop and AMC? Where do you think? I mean, it's been, you could consider it to be a rocket ship as well at some point, but of course, since then it's down over 50 to 60%, 70% almost. I don't know. It's kind of an interesting stock. The reason I put it in there because, again, Wall Street bets, some of the most popular names, may not be that best quality companies, but some of the most popular names in the market, especially among retail crowd. So I'm going to put GameStop in, of course, Dead Horse, and AMC also in Dead Horse, because these are companies that, yes, you can trade them, but when it comes to investing in them, they have not really done anything. In fact, if anything, I should really just put AMC under train wreck, because it's been selling off quite aggressively. I mean, from the 2022 all the way up till, from 2021, the stock's down over 98%. It's pretty much lost almost all its value. And GameStop, from those highs back in 2021, the stock is again down over 74%. So I'm going to switch over to train wrecks for these two companies. Adobe, on the other hand, it's a very, very good, profitable company with a strong moat. But Adobe isn't one of those companies that goes up by triple digits. So in terms of its revenue or its profitability, you can see that it's more recently been trading sideways. It has been rather volatile in the last 4 years. I mean, it's gone up over 166%, then it's dropped down to 60%, then it's back up over 122%. So it's been 4 years. So much volatility for Adobe. So I'm easily going to put that under a roller coaster along with Advanced Micro Devices, Nike, and Tesla. Novo Nordisk. This is one of my favorite companies. Very, very strong player in the healthcare space out of Denmark. We've analyzed this stock multiple times before. Incredible. I mean, just the overall trend is fantastic for this business. I mean, since 2020, the stock's up over 472%. And even recently, the rally is only getting cooled off just by a little bit. I mean, it's down from its highs just over 13%. So very, very easy decision to put it under rocket ships, as it has done incredibly well with very few pullbacks along the way. When it comes to ASML, And ASML is another stock that we have analyzed on the channel extensively, another company out of the Netherlands. It has pulled back a little bit more recently, trading at the same price from back in 2021, theoretically. So it was down during that bear market 56%. Then it rallied over almost 200%, and it's now back down over 27%. A bit of a pullback. So it's a company that's incredible fundamentals, great growth, not super high growth, but very consistent, stable growth. And the stock price overall has been a little bit more volatile. Overall, it's been a net positive for the company, in my opinion, but I'm still going to put down as a roller coaster as it has been very volatile. Gone up, gone down 60%, up 100%, down 25, 30%. So it's been pretty much all over the place. And finally, we come over to Starbucks and Coinbase. Coinbase very much dependent on crypto, so Bitcoin, and but more recently, as you'll notice, that since 2022, it's been just absolutely ripping 676%. And more recently, though, it's been coming down just a little bit. So there's only been a 27-28% pullback after over a 600% rally for Coinbase. So an easy rocket ship more recently for Coinbase. And then finally, if you come over to Starbucks, so Starbucks here also selling off a little bit, quite aggressively. So from its highs of well over $118 back in 2023, the stock's down over 32%. This right here was, again, the same level it was trading at back in 2021, down over 43%. And this was a rally of a little bit over 76%. So it's really just trading at the same level from back in 2019. Starbucks, you can make a case for why it deserves to be in a dead horse category, similar to PayPal and Enphase, not really done anything, going sideways, but then you also could put it into roller coasters and how it has just been so volatile over the last 3 to 4 years. So I'll let you guys decide and help me on this as well. It could, I don't know if it's a dark horse. I mean, Starbucks, yes, I actually used to love Starbucks and their coffee, but now I'm kind of, it's growing too old on me. For some reason, because their iced Americanos seem to be super strong. Cold brews are not up to par with what I've experienced with other coffee chains. So for me, like, I used to be a customer of Starbucks on a regular basis, but now I'm no longer a customer. I prefer Krispy Kreme or even something as simple as like a local coffee house. But Starbucks, incredibly roller coaster, but I'm gonna put that under dead horse as it hasn't really done much in the last 3-4 years. So there you have it. That's the entire rating for these companies, these stocks. Let me know your thoughts down in the comment section below. I'm sure there's going to be some disagreements. So engage and let me know what you think about these stock rankings. And hope you all enjoyed this video and found it helpful. If you did, make sure you drop a like and subscribe to the channel. Share this video with other people as well. Happy investing, and I'll see you all in the next video.